Yeah, well, good afternoon, everyone. I certainly remember that song when I was a young guy on the dance floor. Quick correction there, mate. We are actually now a producer.
Oh,
So
good to hear.
in there. Okay, I want to basically today tell you a bit of a story. It's a story about how a company ends up acquiring a project, how it goes through finding the gold, how it ends up developing it, and how it ends up being a producer. Not many people realise probably that the number of companies that are listed on the ASX, how many of them actually end up achieving what they've said to do and achieve their vision. There's only one chapter in this book being written at the moment. It's a bit like Games of Thrones. The chapter's still to be written, but the movie's still playing. But before I can do that, I do have to actually point out, and unfortunately the disclosure here, that whatever I say, you cannot take as an investment advice. So please take it and do your own investment, due diligence afterwards. Very quickly, as I said, EXG are now in production. We entered in production in 2015. We're only a small company. We made a promise to our shareholders way back in 5 years that we would basically get ourselves into production to become the quintessential self-funded explorer. Obviously, all producers are explorers, but we made that decision to find a small resource, quality resource base that can come into reserves and get that into production as early as possible. As I said before, you've just read the first chapter of the book, and that's what I'm going to spend a bit of time to it. Secondly, I want to basically then explain where I see the next chapter of this story. We acquired the project in north of Kalgoorlie. The first step is obviously you have to have a vision. Our managing director, David, is unfortunately not here today, but I'm here. David Hamlin had the vision to see that the Kalgoorlie North project, just located north of Kalgoorlie, was a great address. The simple reason being is it actually occurs at the intersection of two major structures that host or influence million-ounce deposits. It's a logical place for a geologist to say that's gold. At the time that he acquired the project, there wasn't a single resource ounce there left. Nothing. He bought that project on a vision that he could get that into production in a short time frame and generate real returns for the shareholders. At the time, I was actually still working for Paddington, who I'll talk about later, and I met David there. Later on, he convinced me to come and work for him as a consultant. After 9 months of putting all the data together, we said, hey, we've got some exploration to do here. Unfortunately, we didn't have a lot of money. We managed to convince a $4 billion fund over out of America to lend us $1 million. With that $1 million, we found close to 250,000 ounces at $4 a resource ounce. It was the start of us being able to deliver quality resources ounces in the ground. And we basically then decided that we needed to drive this project to an early cash flow position so that via not diluting our shareholders immensely, that we could deliver them profitable returns out of their share price. At the end of the day, the company could end up being a very big company and the share price goes nowhere. You, the investors, and me as an investor, we don't get a reward out of holding shares in that stock. So we've been very mindful of what our shareholders believed. So over that years, we've spent, around about 16 on exploration to discover 1.3 million ounces. Just as a summary of the story, we do own one project only. We've been offered many projects. As I said, we believe a hell of a lot in this project and in terms of its exploration potential. North of Kalgoorlie, surrounded by large mills. We've been able to do a deal with Paddington that's allowed us to get into production with less than $2 million capital costs. We get the price of, basically now we're probably looking at even closer to 700,000 tonnes per annum through that plant and maybe increasing. It's a big plant. We get the operational benefits of putting our dirt through a 3.5 million TPA plant. The case that you're going to see, it's a base case. There are extremely other ways to grow our company. We're not pretending at the moment that we're a large company. This is simply the first step in many steps towards completing this story. As I've said, there are ambitions. And to have an ambition, you've got to have a vision. To have a vision, you've got to have a process. I know that probably a lot of you have maybe followed Leicester City's success in the EPL. They've come out of nowhere. But if you listen to their manager's talk, he said, it's okay to have a vision. That's fine. But you have to have the process in there, and you have to have the project and the people to deliver that vision. Without it, your vision is nothing. You will never achieve what you're talking about. I believe that in the past 5 years that our company have achieved what we said we would, and I'm now going to paint you a story of what we're thinking we can see in the future. And maybe you might just want to join us on that journey. As I said, we have had small exploration budgets. I totally wish that I had $5-6 million to go round, drill a hole here, drill a hole there. We haven't been able to do it. Second thing is, what makes us different from our peers is that the ounces that we discover, we actually do economics before we drill the hole. There's no point finding a resource ounce if you're not going to ever be able to mine it, or that it's not going to be mined in 20 years' time. Technically, it shouldn't be called a resource ounce, but companies call it. Why? So when we look at our resource to reserve conversions, we sit at about 60 to 70% conversion places of what we've got in our current mine schedule from our indicated. Industry average is about 30. Our discovery costs. People who tell you their discovery costs are liars. I can tell you that because you can take every single dollar that we've spent and you can divide it by the number of ounces, and that will give you the answer. Most people will tell you that the discovery cost of finding that is that. Well, they will forget to tell you that they spent $30 million elsewhere drilling holes and sinking their money. Right? When you are looking for a resource, you are really looking for a reserve. Stop drilling for drilling's sake. So, since 2010, it's out there. We've raised and spent only $24 million to buy, find, develop, and get into this production. No other company out there I know of has ever achieved that. Certainly the companies out there today, and look, they're great companies. I'm a shareholder of a number of them. They're having to raise 50 to 100 million and sometimes even more to get themselves into production. We went into production with a capital cost of $1.25 million and a working capital of $2 million. Bang. Our production profile is the base case. We are mill constrained. We can certainly mine faster and we can certainly produce faster. We have a great partner in the operations down at Paddington. I know that there's been some market misconceptions out there about that relationship. I can tell you right now it's a symbiotic relationship. They need us, we need them. They see us warts and all, we see them warts and all. It's not a deal that normally people associate with. It's not a genuine toll treatment agreement. Our production profile is based simply on the base case of 500,000 tonnes going through that plant a year. Within 2 weeks of mining, they asked us to extend it to 650,000 tonnes. We're now having conversations to extend it even further. So the base case that you're seeing there is that. It's raw. Obviously, the base case MPV is small. That's mainly because we have a 7.5-year mine life and our ounces are spread out. I will point to our internal rate of return, 188%. The reason simply being for that is at the end of the day, our capital costs are none and our assets are really working for us. People talk about all-in sustainable costs. I want to just highlight that in our industry, and it's a bugbear of mine. All-in sustainable cost does not include the cost of funding, and it doesn't include any of the capital costs that they're capitalising. We don't capitalise anything of ours, and we have pretty much next to no debt. For every $1,000 ounces more that we increase our production profile per annum, that base cost drops down by $10 an ounce. That's a life of mine, the warts and all. Every cent you've got, throw it over the top. Don't try and hide the figures. Too many companies will still try to hide behind false figures. Dig down deeper. The partnership with Xinjiang, it did take time. We needed to demonstrate to them that we had the ability to build our own plant. We didn't want to go in there cap in hand and saying, hey, please do us a nice deal, please, sir. Once we did the deal, and once Macquarie came on board and gave us a little bit more money, you should have seen them running to the table. The deal that we've done is unique. It's an open book agreement. We see their costs down to how many dollars they spend on pens and paper. Likewise, they get to see our operations. It is a relationship that both parties are working very hard to establish, And I want to put a line in the sand here and say that it is working well. And despite some people out there in the media saying just otherwise, we have a very good relationship with them. And quite frankly, it's working very, very well. They are now seeing us as part of their business model. And we couldn't get any better praise, especially when they have shortfall in their own production. They're turning to us. Can you deliver small oil? Our base case deposit is the Zoroastrian deposit. It's only drilled down to 300 metres. At the moment, it has a 7-year mine life. To drill a hole deeper than that, you're talking about $100,000. We think that's a waste of capital when we're not there for 7 years. It will grow. It's a similar style deposit as at Paddington. It's a similar style of deposit at the Golden Mile, St Ives. It's a complex deposit, but I tell you, there's a lot of gold there. We've started to open it up, and already we're starting to understand the geology. That will certainly lead into an extended and more efficient exploration programs, which will obviously then give us a better discovery cost and allow us there. It wasn't the first place that we wanted to go exploring. It was simply the easiest place to go. We actually believe that there are better targets out there than this. I think this is 1 million ounces plus. I know that there's some geos out there that think it's more. The potential here is in the underground. The open pit we're currently mining is about 660 metres long. There is a move there to take it over to 1 kilometre. That will take us about 3 years to mine, and then we'll go underground. There are southern pit there, which is another year. And essentially, at the moment, when we get to about another 3 months of mining, we actually have to slow down the mining fleet to make sure that we stay within our mill constraints. Well, guess what? I don't think the mill constraints are going to exist, and I guess that we will be delivering them at the rate that we can mine them. And that is what we're seeing with our operations. So, with regards to where we're at, I don't know, this is a classical diagram. It shows that it's easy enough to speculate and talk up a project, and the speculators leave. They've made their money, they've had a great time. Call them whatever you want. When the reality hits in, that there's a company you've actually got to then go into production, actually then raise the money, and actually find out how you're going to raise it, whether that's through debt or dilution, you go into that orphan stage. That's hell. It is hell because you basically finding out the realities of your project. Finally, you'll come back out when the real lie detector comes through is when you go into production. When you actually have to stand out there and say, that's the tons that I've got, that's the ore I've got, this is how much money I've got. How many projects start up and don't meet their production targets? How many of them fall down and drop their costs? How many of them, if I tell you that you could turn around and look at their all-in sustainable costs and then look at the amount of money they're making and say, well, that can't be right. I really want you guys, if you're going to take something away, go and actually look at the profitability of a mine. Yes, this is a small mine, but it's a highly profitable mine. What it's going to do is allow us to basically deliver moving forward. We are mill constrained. We do have options. We don't have the obligation to deliver the ore to Paddington. We have the option. We can build our own plant. We can go elsewhere. So trying to realise the full potential of this project without trying to dilute the shareholders has been a challenge. But we've got there. Now, the next chapter of that story begins. Our initial allocation will give us about 42,000 ounces a year. Not a lot. We'll generate about $20 million a year. That gives you an idea of the margins that we're making. As I said, we expense everything out, so as we get deeper into our operations, our cash flows improve. Everything we're doing at the moment is funded from our cash flows. We can expand it. We certainly will, if we see that we have the options to do that. We have a very large deposit called Excelsior. We can take that to other mills. It needs a 1.5 to 2 million tonne per annum plant to do so. Obviously, that would take us into 100,000 ounce production. We can build a small plant, 400,000 tonne for our very high grade underground dirt, whilst still meeting our criteria with Paddington. And obviously, the main one is looking forward to the exploration. As I said, we went into exploration to try to get ourselves into production, to find the reserves. We picked the areas that were the quickest and easiest. It didn't mean that they were the best targets. We have got a hell of a lot of ground there that we would love to be able to go and do the exploration budgets that some of our peers have had. What we're obviously now intending to do is, now that we're in production, we generate the cash, we can refinance the business, and we can take that next step forward, the next step forward into being a more significant producer. So, just in summary, I think that we have achieved what we've set out to achieve. We've achieved production with a very, very low capital base, $20 million to do, find, explore, everything. If you can find another company, I'd love to know them because I want to invest in them. And then we can grow this business quite cheaply with organic growth. We have a mining schedule that is restricted. We can add and bring on pits online. We have numerous targets there, and basically, as we move forward, we're beginning to see that Paddington's requirement for our dirt is oxide dirt, our dirt is a great blend for their mill. As we're moving forward, they're asking for more and more of our dirt. We can see ourselves basically filling about 1 million TPA through that plant, and then looking to build our own small plant, and then looking to do other deals in the operation. That is the vision. And obviously, if you can get your C3 costs, and I say C3 costs because that includes capital, that includes the interest repayments, that includes everything. Ignore the asset or sustainable cost because it doesn't show you how the company is getting there. Okay? So that will give you an idea of the margins that we're achieving. So that's pretty much myself in a nutshell. I've actually left myself 4 minutes. I wanted to just say, I know that people there, if there's any questions, particularly with regards to relationships with Paddington or where you think exploration's upside might exist. I think that if you have been following our story, you would have seen a significant downfall in our share price the other day. Unfortunately, that came from media speculation, spooking some shareholders into believing that the operation with Paddington wasn't working. It is. It misconstrued the announcement that we put out. The operations are working. We are looking into trying to rescind that announcement. But look, at the end of the day, we are, unfortunately, in the throes of media. So if there's any questions? No?
You got any questions for David? Or you could just watch him bust out some more moves as he leaves the stage. Cue the music there, Glenn.
Yeah, look, if you want to know the explanation about it was, the media explanation out there was that the toll treatment agreement wasn't working. The grades were down. The reality was that the lab, there was an error at the lab that basically understated the grade that we knew was going through there. Both parties immediately recognised that that was a laboratory error, nothing to do with the processing plant or the sampling plant. It was out of both parties' control. Both parties have a technical committee in place to sort these things out. We had to go through the due process of sorting that out. We have gone through there. We have got an independent metallurgist to look at the work. There is no issue with the plant. The operations are working okay, and it's simply that was something that we put out there just to highlight. And unfortunately, the market did take it the wrong way. Anyway, thanks ever so much.
Written, authorised and spoken by David Potter.